Hello, it's Wednesday the 23rd. I'm FX Plu and this is the market brief. So as expected, the unemployment rate rose to 5.1% in January. And whilst this took none of the shine off the sterling rally, it is of course a warning sign about how bleak things may become once the economy is opened up again and all that support is withdrawn. As the saying goes, cash flow is king. That applies for most SMEs out there. But ahead of Sunak's budget, where the expectation is that furlough will be extended, questions are also being asked over the affordability of all of his support schemes. Surely he's considering whether a compromise is appropriate at this stage, where the support is perhaps tapered and perhaps a little more targeted. We'll find out next week. Nick Hancock was on yesterday. I'm at the end of the road. He played bad cop to Boris's good cop, underlining how the roadmap timetable is entirely dependent on all of us doing the right thing while the restrictions remain in place. And he repeated the warning that restrictions will be extended if the data suggests slower progress than planned. The sterling rally continues to crack on higher, and it seems to be building a relatively solid foundation. Market sentiment certainly holds less fear these days of a significant correction. Yesterday we topped out at 141.15, but we're already at 141.80 at the open today. And that overnight rally was largely fueled by Fed Chair Powell in the US. He was on in front of Congress and he delivered a pretty cautious, some would even say a negative testimony to the Senate Banking Committee. He reported that the recovery was uneven and certainly incomplete, and that the Fed will retain the accommodative policy, continuing to add liquidity through their bond purchasing program for many months to come, not exactly championing the US recovery. Looking ahead for a little positivity, we do have weekly jobless numbers tomorrow, and then of course non-farm payrolls next week, but neither of those are really expected to set any records yet. So suggestion is that the dollar's more likely to remain on the back foot for the time being. That said, the euro didn't manage to post many gains yesterday, any gains yesterday in fact, with the eurozone lacking any real positivity of its own at the moment. Euro dollar fell to a low of 121.35, and that's despite the weaker dollar. Bleak outlook for the single currency. Right, that's it from me. Bit of a boring route today, a bit too many cars. I'll switch it up again tomorrow. Do join me again.
If you do not have a clue, then just tweet through and ask FX Blue.